All set?
Yep.
Okay, welcome everyone to the 61st edition of our Wook Review. So as always, Wook Capital Management Inc. and its employees solely provide investment advisory services to family clients and do not provide investment advisory services to the general public. Furthermore, investments are highly speculative in nature and involve substantial risk of loss. We encourage investors to obtain advice from your professional investment advisor and to make independent investigations before acting on information that we publish. We cannot assure you that the information is accurate or complete. We do not in any way warrant or guarantee the success of any action you take in reliance on our statements or recommendations. Past performance is not necessarily indicative of future results. All investment decisions of an individual remain the specific responsibility of that individual. So yes, do your own due diligence.
Excellent. All right. I'm going to join my personal account to the spaces here. I don't know why it doesn't even show up. Why our spaces link doesn't just show up on the right-hand side. Okay. I just hate this website. This man just destroyed this company. I'm referring to Twitter. Um, Well, this man also decided to make a vehicle that no one wanted or needed, and I guess let me Jesus Christ, this is not doing what I
I will
wanted.
say, I don't think nobody wants the Cybertruck. I think there's plenty of fans out there that want one, but is it a good vehicle? That's a whole other question. I think the range estimates and obviously the targeted price points have all been a huge flop. We kind of talked about that at the Wook Review. Marquez Brownlee had a really good tweet about it, and he's been a Tesla fan over the years. I know he had a deposit down on Roadster 2 back when they announced that, and I think he paid like 50,000 or whatever the Founders Edition deposit was. Some of money that if he had actually just invested it in Tesla stock instead, he would have made many millions. But yeah, he's been a big fan of Tesla, and even he had some critical thoughts on the range estimates and the price points that they actually are launching at.
Yeah, let's look at that. So you've got Jesus Christ, too many fucking tabs. You've got this thing starting at 61,000 pre-tax credit, pre anything, which is important to note. There's a lot of things that they're going to upcharge you, including that $16,000 extended range battery pack, which, from what I saw a couple of analysts note, is just literally handing Tesla your hard-earned money because the cogs on that sort of thing will be a couple $1,000s. So the gross margin on those range extender packs is like 80+%. Well, I guess, sorry, that's direct maybe cost, but either way, it's a very high margin item. That little extender that they're going to sell a bunch of people to give up a third of their damn bed. It's just astounding that this thing's getting built. But I mean, as you can see, in terms of ranges, it's not very impressive. It's nothing at all close to what was touted. Of course, Elon, the king of touts, touted vigorously for many years about this product, which has now disappointed everyone, it seems. I'm sure there's going to be sales whenever they sell it, and as they always do, they're selling the very high cost one first, the one that starts at 100,000. So again, this was a truck that was promised that I forget what the initial price was, 39.9. So sure, the Cyber Beast is not the base model, but the fact of the matter is these came in way above what was promised with way underwhelming specs. Not much else to say. And I mean, sure, the thing goes 0 to 60 in 2.6 seconds. My Volt goes 0 to 30 in 2.6 seconds, and that's good enough for me.
Yeah, I think Tesla and other EV manufacturers really touted 0 to 60 times when real car enthusiasts don't really care about that stuff. It's not a
Here's the part, Joe, that people don't
metric
really
that
think about.
determines how sporty a car is.
There,
It's just
there
how quick it
is
is.
there is value in the very fast 0 to 30 times, insofar as you have less. Well, like this more so goes into like actual practical use cases for EV. Like if you're doing like if you're driving a semi or even just a UPS van, like those fast pickups, which is why like Allison's transmissions help make work more efficient. Like it could make work more efficient. It could make driving more efficient for people and for again the particular use cases. But yeah, I mean to your point, who really cares that much about straight line 0 to 60? Like it's just one of those numbers that is a very like ubiquitous. People always love to throw it out, and it caught on because Tesla was able to drive down uh, the number, which is great and all. But like when I'm in an automobile, the percent of the time that that number is relevant to me is pretty darn close to zero.
Yeah, it may be a 911 in a straight line, but it's not gonna take it on the twisties, right? It's not gonna actually be a funner car to drive. While you may enjoy it, electric cars, are pleasant. The smooth rides typically, but it's not sporty. It's a stretch to say that it's a sporty vehicle.
Yeah, I always forget if I should. So I have the Discord stages open. Shoot, I was supposed to join with my personal account and I got distracted. What I get for trying to do all of this at once? Okay, I joined my personal account. Maybe some more people will come in. I'll just make myself a speaker. I think it like shows up on the right side of the browser now for more people. Well, maybe. I don't know how that works now that I made the account private.
Yeah, I was curious about the private, if that's going to impact reach at all. Not really.
I reach the people
An
who
expert.
follow me. I have more control over who follows me, which, quite frankly, it's just gotten to be a very noisy. Like the way Elon's changed the platform to just amplify misinformation and bots and combat and combativeness rather than, yeah, you know my opinions on that. But anyway, back to Cybertruck. So what I saw from some of the sell side analysts were pretty meaningful revisions downward to the volumes that they expect. I saw at least most recently this afternoon was from Mr. Adam Jonas, who's been a perpetual Tesla pumper over the years. His price target is still at 380, which would be 100 times his 2025 estimated earnings. So it would be closer to 140 times his 2024 estimated earnings. So again, just silly numbers that he's playing to the reality of the Tesla investor base, which is there's no care about math there. It's just can Elon make the stock price go up? That's the only thing that matters. And it looked pretty shitty today. It looked really weak in a tape that looks to me like the Fed's job is going to just get harder from here. The idea that the 10 years back down to 4.2, this whole party everyone's having that we can have our cake and eat it too with outsized economic growth above long-term trend, above economic capacity, without any repercussions. Not buying it. My insurance bill came in and it was plus 20.5% for my last 6 month period, and there were no accidents. So car insurance is going up. I don't know where this deflation people are talking about is happening. Okay, well, anywho, let's I guess keep going through the prepared material. So um, yeah, I mean, again, Tesla was weak today. What did they close down?
Hey, keep yourself unmuted if you could on Discord, just because I see quite a few people in there.
Okay. Um, as you can see on my screen, I'm just blurring out my position dollar amounts, but I have my account up so you can see my current Tesla position includes some. This is my personal account, not Wook Capital related. But I currently hold some $200 strike April puts on Tesla. Uh, the stock closed at 239.30, a 760 sorry, with a B, market cap.
Tell me if you heard differently, but I was shocked to hear that the Cybertruck delivery event was for 4 trucks.
I'm not shocked at
They
all.
they delivered 4.
Yeah, they're he's just a fucking con artist. He's the king of cons.
I'd love to know if I'm wrong on that. Like that seems ridiculous. I think I also saw 10. Somebody said 10.
Either way, it's immaterial. Just like the number of semis that they've delivered, just like the number of roadsters they've delivered. Oh, that's still zero. Sorry.
Okay, I'm seeing 12. Investor.com says Tesla delivered 12 Cybertrucks during its delivery event Thursday in Austin, Texas.
Yeah. Well, I'm glad to see the market didn't get fooled by this tomfoolery. I do, as I mentioned on Wednesday, see massive downside in Tesla over the next 12 to 24 months. You know, most of the time when companies are valued like high growth companies, earnings are growing. In fact, Tesla earnings are declining. So while they will point to their volume figure or their top line sales figure, they're ignoring reality. This company's valued like it's, you know, some. Oh, look at, as long as Elon can keep convincing people that he's going to have full self-driving capabilities in the car next year, and people model that into what they think Tesla's worth, yeah, they can continue to spin that story that they've been working on now for quite a few years, successfully spinning the story, not so successfully achieving uh, the level 4 autonomy. But anywho, okay.
What I'm confused about is so Sawyer Merritt, I see him always on my feed. I'm sure Elon purposefully pumps his account because
Yeah,
all he
he's a
ever does
Tesla
is
pumper. Yeah.
about Tesla. So anyway, I see a tweet of his saying, many doubted this day would ever come, but here we are. The auto industry is about to change forever. Like I get being excited about this cool,
That's so
funky
fucking
looking new
cringe.
truck, but how is it supposed to change the auto industry forever? It's just a very gimmicky, quirky looking truck with a lot of weird things about it and some sharp edges. Nothing about it's going to change the. It's incredibly like non-aerodynamic. Like, do you think other automakers are going to follow that trend? I doubt it because they don't have cult followers that will buy anything, right? If Ford put out a truck that was incredibly unaerodynamic, it probably isn't going to be a big selling point like it is with Tesla and Elon's Cybertruck. So I just don't get where the fans think it's going to change the auto industry forever. Is it fascinating looking? Yes, but is it revolutionary? No, there's nothing revolutionary about it. I mean, the bed opens and closes. That's kind of cool, but like, what else is actually revolutionary? I can't think of anything. Bulletproof? Come on, it's just another gimmick.
I think it, as people have said, it's a DeLorean 2.0. It's just going to be an albatross. Um, if you listen to the last earnings call, it's pretty obvious that Elon knows he fucked up trying to bring this thing to market. He knows they're not going to make money on it, if ever. Not going to make money on it near term. So uh, I don't want to waste any more breath talking about Elon Musk.
I mean, I can see money. I can see value add to Tesla other than making money on this. It's just like the fact that it exists. It's kind of like a Halo car. Like when you go into an Acura dealership and there's an NSX on the showroom floor. You're not going to go in and buy the NSX, but it's going to make you want to buy an MDX or a RSX or something else, right? So that's kind of where I see this in Tesla's lineup is it's kind of like the Halo car that you wish you could get, but instead you get the Model 3 because it has some of the same features and you don't have to spend 100 grand. So that's where I see it. I think it keeps cult members happy, but yeah, I don't see this being a big seller for them. I think there's going to be a lot of videos and photos taken of these when they drive down the street, and the people that drive them are going to feel really cool, like people did when they first bought a Tesla, over a decade ago, right? When Teslas were still interesting and fun to see on the road. Now they're everywhere. They're like appliances, at least here in Southern California. So I think that's the appeal is the real nerds, the real geeks that want something that gets
I'm
them
a nerd.
attention.
I'm a geek. I don't want this.
Well, you're not this. Well, you didn't weren't the second part. That want something that gets them all the attention, right? Um, I think it's like a nerdy version of like a Lamborghini Countach. Like it's for that kind of geek that wants photos taken of them.
I see
But
what you're saying.
yeah, That's where I see it.
Hopefully I don't ever see it. All right, so let's move along because we've wasted enough breath on Elon this week, as we do every week.
We have a speaker request from Archie Satz. So I've brought you up here if you want to add something before we move on.
I did want to make a comment on the Cybertruck. I can say a few things that, in regards to its aerodynamics, it does have a pretty good or low drag coefficient, just because it's actually better than sort of the F-150 drag coefficient. So I'm not sure that, I mean, it is actually fairly aerodynamic for a truck.
Okay, that's fair. That's fair. I'm thinking more of long because you talk about it being more of a sports car as well. It's definitely not, in sports car territory, but that's something he's been touting.
Right. I think that comment refers to its speed, and there was a video that they compared it or did a test with a Porsche 911, and it beat the Porsche 911. And kind of in sort of grandiose way, the Cybertruck was towing a Porsche 911 on a trailer. So I guess that was kind of a marketing thing that they did, but that's, I think, what they're referring to as far as
The
the
whole
speed
thing's a
and
marketing thing.
And the other thing that is different than a regular pickup truck is sort of the exoskeleton, which the skin is actually a part of the structure of the truck rather than just sort of an application on top, and it doesn't need to be painted. So it's more durable in that way. And so it's partly, it's kind of a part of the manufacturing process, sort of, allowing the outer part to be an exoskeleton versus just an application or a skin, which normal trucks are, which makes them, that's why it's easier to dent and scratch, regular vehicles. So those are just some of my comments.
I'm curious to see how high insurance premiums end up being for this vehicle. We hear the detail from Hertz about how the cost to repair for collision is meaningfully higher in EV. I'm wondering for these behemoths. I saw a 35-mile-an-hour frontal crash that destroyed the rear axle entirely. I don't know how durable these vehicles are truly going to be. And typically, with uncertainty, a premium gets priced. I would think premiums would be high, but I haven't seen any data yet, given the vehicles just got delivered a couple yesterday, I guess.
Yeah, I have a Tesla, and I can tell you that Tesla cars are more expensive to insure.
Insurance premiums are up like across the board this year too. I had to reinsure a vehicle, actually 2 vehicles this year, and definitely higher than I was paying last year with a similar driving record. So
I got to go shop around now because State Farm thinks that raising my rate for no reason by 20% is something that I'll stomach. And look, that's one thing a lot of consumers do not shop around, and to their disadvantage.
Yep. Yeah, I have different insurers for almost all my vehicles, like Geico on one, Progressive on another, Haggerty on one. And that's a great way. Just who cares? If it's on auto pay, why do you care if it's to the same provider? Whoever gives you the best price can give you the best price. It'd be nice if there was, some sort of discounts for having multiple cars in the same.
Well, most
insurer.
insurers offer multi-vehicle, multi-line discounts, but to overcome a big price difference, it's not good.
Yeah. It's not like worth it. Haggerty's an interesting one, though. I know you only have one car, Rod, but that's worked out nicely for me. They just require it's collector insurance, essentially. So they require it to not be your primary use vehicle. You have to provide proof of insurance on a primary use vehicle, and then you can use the Haggerty insurance on a car that you drive less often. So that's something I like. It also has like no premium, and you can pretty much declare the value of the vehicle on your own.
All right. Well, I'm going to move us along then from Tesla. WS, thank you for the input. And yeah, Joe, I'd heard you say the load to aerodynamics. I didn't know the precise number. I was looking for it while you were saying that because he is right that it is more aerodynamic than your kind of benchmark pickups. So if Elon likes to make obscene, grandiose statements, so I haven't I try to ignore him. But if he's calling it like a 911 just because it has the 0 to 60 speed on the $100,000 model that they used, well, okay. It goes back to what we were talking about at the beginning, though. Like, is that important? But yeah, it's great marketing. Clearly, the fact that we're talking about it, he's getting free, publicity, right, from all the media coverage that he continues to garner. So it doesn't matter if the truck is going to sell, 10, 20, 30, whatever thousand next year in the big scheme of things. So moving along then to Shein and these other kind of IPOs that are potentially bubbling up. It was a really frigid market for bankers, investment bankers, for companies trying to come public. And it looks like the whole. We love when the sell side loves to say green shoots, but there's some activity percolating, and especially if this market wants to aggressively mark down Fed funds futures like it is doing, and disregarding maybe some of the things Pavel had to say this morning, and focusing on the things that it likes more than anything else. Maybe it's setting itself up for trouble, but you would think that it'll become a more amenable IPO environment if we get some alleviation of what he did refer to as restrictive rate over the course of 24. I thought I saw that the year-end 24 Fed funds futures is now below 4%. So you've got 125 plus bips, 130, 40 bips priced in then of cuts through year end. So I mean, that depending on how swiftly they're cutting, when they begin cutting, I thought I hadn't need to look at FedWatch tool, but I thought I saw now that March has a cut kind of priced as more likely than not. This could be beneficial then for people who've maybe been clear of the market if we continue to have this very risk on appetite that we've seen across a variety of markets over the course of November. I mean, November, I'm sure people saw the strongest November since 1980, second strongest on record, I believe. And then just today, right? You see kind of some of the most interest rate sensitive, which is another way of saying some of the smaller, shittier, perhaps poorly capitalized, weak balance sheet, high variable interest rate exposure companies performed best today, right? The IWM strongly outperforming the Qs and the SPUs. I had a 3% move in IWM, incredible, small cap index. So I saw a lot of crap, as a proxy for crap. PLBY up 16%. Beyond was up 11.6. The artist formerly known as Overstock. Yeah, I mean, who knows how durable this is? I'm still pretty skeptical about the durability of this. But from a market, it's good for for bankers. It's good for companies wanting to come public if valuations continue to stretch, and there's appetite for risk assets, as there appears to be. My girlfriend buys a lot from Shein, Joe. I do have a shirt she bought me from Shein, so I do have some personal experience with them. But I do not use, what is it, Temu? I don't use TikTok, as you know. But these are really interesting, like sort of, I want to say they're disruptors, but just changing the way that people consume apparel products, changing the way people consume product just in general from the types of advertising through TikTok and the like. I don't know, Joe, how intimately familiar you are with Shein and Temu, or if you have any thoughts.
Never used Shein, Temu either. I did see an ad for Temu on my Instagram, strangely enough, the other day. I saw that they try to convince you to purchase stuff by saying it's free, and then I'm sure they charge shipping or whatever. I haven't personally gone through with anything on there, but I have used AliExpress in the past, and yeah, I mean, if people can get their fast fashion directly from China without having to go through an H&M or a Forever 21, I think that's great. I mean, that's good for the consumer. Is the stuff the highest quality? No, but we live in a world where trends change so quickly and people get sick of outfits. You know, once you wear it once on Instagram, you may not want to wear it again, and that's the reality of the Gen Z environment. So maybe this is fine. This will, you know, provide some clothes people that they can wear only a few times and then move on to the next thing. It's priced accordingly, right? Where if it's $3, $4 and you get 2, 3 washes out of it, you don't care. You move on. You get to go out in it, do your thing, and look cute. And I think people are fine with that. I don't think people care about the highest quality clothes anymore, which is a bit of a shame. I like to purchase, you know, outerwear and pants and high quality like sweatshirts that'll last. But yeah, you know, it's not always people's priority.
One of the other things is that they basically are able to skirt import duties through this direct shipment model where trying to think what is it I saw where like Shein is partnering with these local, many of them mom and pop kind of shops to produce, and then it's getting shipped directly from China. Right? They don't have a fulfillment center or like they're not warehousing in distribution centers, in North America and then shipping out from there. It's coming straight from China. They're avoiding these import duties on these packages. Um, I don't know if that is going to politically. It's like you said, consumers are benefiting, the end consumer at least, through lower cost, perhaps comparable quality goods. But it's this is something. I don't know how sustainable that is. That you kind of give an unfair advantage to companies that are shipping, drop shipping from China, and avoiding that. So I think we talked about the de minimis rule a couple weeks, months back. I know I put some notes down on it, but I think that's another aspect of it that's important to remember. Um, yeah. Okay. Um, got two more stories I think to scroll through. So for next one, yeah, I mean, so far this holiday shopping season, there's been some indication of outperformance on the part of the consumer from at least the Black Friday and Cyber Monday perspective. There were market improvements year over year from a couple of different data sources. If you look at Adobe data, the Black Friday shopping was up, excuse me, 7.5, and then Thanksgiving itself was up 5.5. So even back out a couple percent, because right, those are nominal numbers. So on a real basis, you have to less out the inflation, which has been moderating. But nonetheless, it's still positive real growth year over year in spending. I did see that there were a couple of reports pointing to a big expansion in buy now, pay later as a mix of spend. So it does make me wonder, again, how durable are some of these consumers' capacity to continue spending if they're leaning more heavily on buy now, pay later, buy now, pay never, depending on your perspective. I did like this one graphic that you put in the newsletter that I saw on Bloomberg showing which consumers, not consumers, which companies were outperformers and underperformers. So Nike, from a year over year standpoint, had a huge blowout Black Friday. Amazon had a great Black Friday, whereas J. Crew and Capri Holdings, some of those didn't. So they used Bloomberg's second measure was the data source on that. But for retailers, this is the make or break time of year. Again, as you can see on the screen, if you're watching, the share of sales on Black Friday, some of these companies literally generate 2-3% of their sales for the whole year in this one day. And when we think about the full fourth quarter, a lot of these retailers report November, December, January. You're talking for some of them, we always, of course, talk about GameStop. Like nearly 40%. It's in the mid high 30s% of total sales. So seasonally, very important for a lot of these companies. A lot of the retailers had gotten beaten down. So it will be interesting to see if there's some opportunities on the long side, perhaps. We talked about, I've been thinking that there will be a sell-off into year end and further tax loss harvesting, but perhaps I'm wrong and euphoria rules the day. But overall, consumer does continue to spend, even though there's other kind of data points that show maybe it's getting long in the tooth for how long that can continue. Joe, did you spend a lot this year on Black Friday?
I was about to add, I didn't purchase anything. I was actually on a flight over to Oahu on Friday, so no spending on my end. But same with Cyber Monday. I didn't really buy anything. I think when retailers expand these sales to make it Black Friday week and Cyber Monday week and like Cyber Monday weekend and just kind of broaden the range of the sale, it doesn't seem as exclusive, right? I mean, we used to go into these Best Buys and these Targets and have an all-out brawl for a $300 television that's usually 500. Like that used to be America. We used to go to war every Black Friday for these deals. And now when everything's online and when everything is longer than just 24 hours and there's these multi-day sales, it doesn't really feel like it used to. Um, and maybe that's not a good, maybe that's not a bad thing, but definitely doesn't get me excited. Didn't see anything that really caught my eye. I think a lot of stuff is really just like marked down to normal price, but then they display, that the original price is much higher. It's a bit of a gimmick at this point.
I didn't spend much. I'm not really a big consumer, but I was annoyed because I was looking to buy a TV, which I did end up settling on one, but on Sunday, Amazon had it for $866. And I figured to myself, well, let me wait for Cyber Monday. Maybe the prices will improve. And unfortunately, they went up on Cyber Monday, at least for that particular TV for sale from Amazon. So I ended up settling on a much lower cost, same size, lower quality TV for like $350 from Costco. But that was my shopping experience.
Yeah, I purchased a TV in my house on it was Facebook Marketplace for $400. It was originally like a $4,000 TV over a decade ago. It's a very nice TV. Obviously, TVs don't hold their value. I paid 1/10 of what it was when it was new. But I will say the best thing you can do is just get an Apple TV, add on, plug it in. It's the best experience operating a TV I've ever had. If you have a MacBook or an iPhone, you can expand your screen onto it very easily. You can AirPlay different content from your phone onto the TV very easily. And overall, just using the remote, so much nicer of an experience. I absolutely hate using any other TV now. When I use the TV in my bedroom, which I don't have an Apple TV plugged into, it's the slowest, laggiest, clunkiest user interface. Like the button response is terrible. And it's a Samsung, so it should be okay. I know Samsung has different lineups. Some are value, some aren't. But regardless, just using the Apple TV, so much nicer. Definitely recommend one of those.
It's funny. I had the opposite experience. I hated it and I got rid of it, but that was years ago. So maybe it's improved since then.
It's certainly improved because when you connect it to your Wi-Fi, it obviously updates. I've had a pretty good experience with it. I don't know. It's worth a shot. If you're not as intertwined with the Apple ecosystem, it may not be as useful. But I've certainly had a good experience with mine. Anything beats using a remote, like an infrared remote. I oh my God, terrible. You got to point at the TV and give it 3 seconds to register. It's like the worst.
I don't know what remotes you're dealing with. I guess I'm just an old man. I much prefer that.
The Apple TV's got a Bluetooth remote, so you don't have to point at the screen. You could be like in the other room. You can broadcast through stuff. If I don't know where the remote is, I just go on my phone and I can use my phone as a remote.
Why am I in the
Pretty
other
easy.
room with the TV on? I don't understand why you need that.
Just because if I'm playing music from the TV, I want to be able to change it.
Oh, people play music from the TV.
Yeah, I like to keep it on the background.
All right. Well, speaking of old men, rest in peace, Charlie Munger. He almost made it to 100. He was 99. Probably the greatest number two in history, right? At least in the investment universe. And I feel like not enough. I don't know. Maybe it's people who are loosely aware of kind of the investment universe don't maybe fully appreciate Munger, his impact on Buffett and on Berkshire. Uh, just a really unique individual. I want to read more. Now that he's passed, like I feel like I need to read like an official biography or something. I know a bit about his backstory. I did read a few articles about him this week, and one that really did stick out to me because he's always been an advocate of this from having followed loosely the guy for years. He made there was a story he shared with Jesus Christ, it was one of the Wall Street Journal writers. Can't remember his name right now. When he was a child, he had a sibling, and he and his sibling got attacked by a wild dog, and it bit her. Somehow, it did not end up biting him, and she died of rabies. And it just kind of highlights the role of luck and things outside of our control in our existence, in our lives. So you can be a smart, hard worker. You can be a great learner, and he would espouse all those things. But you can't forget the impact of luck on life. And I thought that was a telling story. But Charlie, famously being the one who kind of convinced Buffett that he, should be willing to pay up, pay a fair price for a wonderful company, as opposed to kind of the cigar butt philosophy of paying wonderful prices for fair companies. The former would return more than the latter over the long run, and clearly the math has largely borne that out for them. And also the impact, he's noted it, Buffett both noted it, this, a handful of major winners. And this is a guy who passed at 99, who'd been investing for almost 7 decades. Just a handful of absolute grand slams, are what will define your investing life if you're going to have an outsized performance. And it's very easy, I think, to get very myopic and short-sighted in all this stuff. But as both Munger and Buffett have always espoused, it's you could be, especially Munger, just don't be stupid. Just don't do stupid things. Try really hard to inverse stupid. Anywho, Munger, rest in peace. That's all we had in the prepared material. If anyone wants to chime in, request to speak, feel free. It's 4:45. Joe, I don't know if you wanted to add anything there, but
No, nothing on Munger. We could add a book to the book club. I mean, we've got nothing on the itinerary for December. December's just started. Maybe a short bio on him would be interesting.
I don't even know if there is one. I'm just talking out of my ass.
I mean, there has to be.
Charlie Munger, a biography. Just poor Charlie's almanac. Yeah. Oh, we can think about it. Not seeing any requests from anyone in Twitter. I know we have a few people in the Discord channel. I don't know, Joe, did you find any interesting trades or stocks that you hadn't yet come across this week?
This week, I'm trying to think of anything that caught my eye. I think GameStop kind of continued some volatile movement. We love talking about them. It was up 39% over the past week when it was at $17, and now it's back down to 15%. Still up 25% this week. So interesting stuff.
Here, let me share
with,
my GameStop. I have my DCF model up. Let me put it on the screen. Let's talk GameStop.
But yeah, Robinhood put in their 24-hour trading for GameStop this week. I actually did. There was some questions about whether or not that was recently implemented. So I thought, why don't I just ask Robinhood? So I went to Robinhood's support chat system, which, hey, it took a whole day for them to respond. So that is not so good considering they're managing your money. And, well, not managing money, but holding your money. So not great. It took them a whole day to respond. But yeah, they did confirm that GameStop was added to the 24-hour market system on their app on the 28th. So, yeah, this week.
Yeah, there was a huge uptick in small dollar option trades earlier in the week. So some people hopefully made some money buying low and selling high. Such a crazy stock chart. Okay. What else? Crazy rallies in the crypto universe. Coinbase is trading back up at, I see it's at like a 10 times enterprise value this is forward sales as well. So growth, the sell side is estimated on a trailing basis. It's an even higher multiple, but Coinbase, it seems like the cryptards are very hyped about a Bitcoin ETF driving billions of dollars of economic value to Coinbase investors. I'm pretty skeptical of that personally. I had entered a bearish risk reversal in my personal account. What was it, 2 days ago, 3 days ago, something like that. And I did buy another Coinbase $100 strike put, pretty short term expiry, just before the close. I mean, I know, Mr. Thousand Needles, you were in the chat and you were remarking about the technicals of Coinbase. I'll just pull up on my screen the kind of chart that I had put together just briefly to show like just how extraordinarily rich the valuation on Coinbase has gotten again. So, they're obviously on a trailing basis losing billions of dollars. At least trailing 12-month EBITDA is negative 1.3 billion. Their enterprise value is 30 billion. So that on that EV sales, all the way at the highest kind of line, which I guess for a money losing company like Coinbase is the only way to look at it. I guess you could look at like EV to gross profit. But regardless, again, it's gotten extraordinary. I think so many people, so many retail speculators look at stock charts only. That's the only thing they care about. The TA, what do the lines say? What do the crayons say? And they say, oh, this thing was a lot higher, so maybe it'll go back where it was. Yet again, when you try and connect the underlying business with the stock, and you look and say, okay, so for much of 22, this business traded, at least on a trough level, at 2 times EV to sales. Now it's trading at 10 times. There's a lot of future growth that is not being baked in by analysts, or this is just a resurgent bout of mania driven by the prospect of ETF, I guess Bitcoin. But it's not a space I follow hyper closely. I just think this is a good short here, personally. Which means it's going to all-time highs, folks. Yeah, like I would compare the valuation richness of Coinbase right now to when it kind of made that peak in November 21. I'm not trying to be extra with that, but I mean, it traded at 11 times forward sales. We're at 10 times. So could the multiple expand another turn? Sure. But that would literally put it on par with the peak of the mania, the mania year, if you will, of 21. And I find that doubtful. But you know what? People clearly want to be in the market. They want to be long risk assets right now. So getting in the way of momentum is a dangerous thing. What's up, Sick?
Yeah, how's it going, guys? Sorry, I'm probably not gonna be on too long. It's getting over a cold, but I remember seeing something like a couple of days ago where I think one of the executives Coinbase sold a chunk of his stake. Wouldn't
Bullish.
That's bullish apparently.
Bullish.
Okay, so can I don't know? Do you have a theory on the price movement? I mean, if an executive's selling out and then the price is going back up, is that due to just the general sentiment of the crypto market, or there's something else behind the scenes with the plumbing or something that that I'm not educated on?
I mean, look, it is a fairly, I guess, heavily shorted stock. I mean, it's been double-digit percent shorted. It's right now, according to FINRA data, at around 10%. So some people could be getting squeezed. But it's not like it's a mat. I mean, on a dollar basis, it's a big short though, right? It's over $3 billion short. But I think it's just a lot of this excitement, right? I mean, crypto markets in general this year have been on a moon mission. What is it? Bitcoin is up 134% year to date, just shy of 39,000 right now. It broke out, I guess, on the lines going up, whatever that means. So, yeah, I mean, I think the notion is that Coinbase is the survivor, or maybe the big survivor. If the FTX is dead, rot in jail, Sim, scumbag Freed, and then the other one, whatever he's paying, some big fine. Hopefully, he'll end up rotting in jail. But I guess for now, Armstrong and his associates haven't yet been found guilty of any federal crimes.
Yet. But also, at 10% shorted, that doesn't seem that crazy.
No.
I mean, I see GameStop. Isn't GameStop 20%, and the price it's been on a steady decline essentially. It's been, while volatile, it's not as volatile as you would think it would be.
Yeah, again, the FINRA data over the last 2 years ranges from 9% to 20%, give or take. And it in the last month or two has gone from let's call it 17 to 20. So 3% of, let's call it 4 billion. I mean, you had an incremental 120 odd whatever $1 million that shorted it. Are some people get squeezed? Sure, but I find focusing too much on those metrics is not helpful, because it's not a monolithic entity. It's it's many individual market participants. It's not like it's just one party. So will some people get squeezed? Sure, the price goes up, and then some people opt to sell, or more people opt to short. Right, it becomes more attractive from that perspective if it goes up too high. So I don't know. But yeah, I would agree with what you said that on a percent basis for Coinbase, it doesn't seem like it's that high, or the likely primary driver. I think it's probably more about the excitement over some SEC approving this Bitcoin ETF thing, coupled with the underlying coins rising meaningfully in price year to date.
Gotcha. Also, did you guys? I know you guys were covering Tesla earlier. I got in kind of a little bit late, but did you guys talk about like Elon Musk and his talk with like the New York Times, where he was saying "fuck you" to advertisers and like specifically saying hi to Bob Iger after that?
Yeah, we talked about that on Wednesday too. I'd rather not talk about Elon anymore.
Yeah, like yeah, I can't join on those like calls during the week, but yeah, I thought it was kind of hilarious. Then yeah,
Definitely another one of many red flags from a investor perspective. Usually when corporate leaders are lashing out like that, bad things happen to their stocks in the future, in the subsequent periods. I saw a stat talking about like the frequency of F bombs and S bombs in transcripts and the performance of those securities after the execs made those statements, and it's not good. But you know what? Mr. Musk has bet on black, and it's come up black, and he will keep betting on black. God damn it! Does not know how to walk away.
also, did you guys touch up on any of the energy sector at all?
Well, we
Out of
haven't talked
curiosity.
about energy today. There was the OPEC Plus meeting this week. Yeah, we didn't talk about that at all, though. Did you want to chime in on it, or?
No, well, I'm not the expert, like there's other people that are like much smarter than I. But yeah, I mean, like the only thing that I'm following up on it was mainly because like I got like a large position in like Petrobras, and I know like they said they were there was like a rumor that said somebody said that like Brazil was going to join OPEC Plus or something like that, but they weren't gonna join in on like the cuts essentially. And then I'm kind of curious on your take in the refinery sector in the United States. VTNRs have been just taking big hits the last couple of this. I don't know, like this last year essentially. But with if there is a soft landing and we are going to be growing back again once like they turn back, uh, once they cut the rates again, like how do you see the energy sector moving?
The energy sector, to me, is broadly more priced for recession than most other sectors. So there, the downside risk is more priced in for sure to me. Um, I I mean, there's been a couple of data points that have come out in the last week or two about deteriorating gasoline demand, building uh, crude inventories, things that are bearish from a price perspective. Obviously, if you've got OPEC willing to extend continued cuts, that's helpful that you're not going to get a flood of supply. But unfortunately, there's been this uptick in domestic production, and that like needs to royally roll over from a supply perspective. I mean, the oil and gas producers are doing just fine. At the current prices, they're going to print a lot of money. At least most North American E&Ps. But yeah, I mean, crack spreads are still historically high, even though they imploded on the gasoline side late in the summer or early fall. They've come back a bit. Diesel's still pretty solid. So your 3-2-1 crack is still north of 20. It, it's solid. I think a lot of the energy equities have kind of gotten thrown out, especially the smaller cap stuff. Nobody wants to own it. There's been a huge structural, like very net short by hedge funds in kind of energy and then the commodity itself, crude. So to me, it's like the positioning in energy looks more like there's going to be an actual recession. So if that does not transpire, and there is in fact a soft landing, you would think there's actually, I would think, and I do think, and I'm overweight energy, not for that reason per se. I mean, a lot of these energy assets, you mentioned Petrobras, they're still just generating a lot of cash. These are real assets that are generating returns, returning cash to shareholders, despite, at least in the case of Petrobras and Ecopetrol, some political overhangs. But just cash spigots, unless oil is going to go to the floor, which, well, hopefully they'll refill the SPR, right? So I don't know. I'm still pretty long, but yeah, that's been a very painful one for me.
Yeah, same here. Just seeing VTNR just kind of like get cut down like every quarter, like by like 20 some odd percent. Yeah.
Here, you
But
uh,
yeah, like I was like in one of those calls with Chapman and what's his face Porter Collins came by a couple times. He was just like talking about Brazil, and it was just kind of interesting. I don't know if you ever been in you're pretty familiar with Porter Collins, right?
mhm.
Yeah, so he's pretty like big on Brazil. He was just talking about like growth there, and they're like the first the country to cut rates at the moment, right? And
I
then
have, for those following along in Discord, I have my PA on one of my PAs on the screen, one of my Roths, I guess, and I have it filtered by net liquidity, and you can see PBRA is a top 10 holding in the Alsman PA. So I certainly am also pretty bullish on Brazil, on Petrobras. And yeah, I mean, you're getting just a wonderful return of capital. If oil just chills at 75 or so, these companies are going to make a lot of money.
dude, I'm loving that company right now. I'm not, I don't know what I know. Like I know there's definitely risks there, but I don't know. Like definitely people misprice the whole Lula thing. But yeah. But yeah, other than that, there's also BTI. Like I know we haven't really touched on BTI in a good minute also.
Yeah, what about it?
Yeah, so originally, like I bought BTI because like I was kind of under the impression that we might be getting to a recession like a year or two ago.
Oh, I mean, dividend
And
stocks have been the worst performers, which again, just everything has been confusing to me about this last couple of years. I mean, the notion that these Nasdaq mega caps are beneficiaries in apparently every interest rate environment, but I would have thought that companies that actually generate cash flows in the near term would have done a hell of a lot better, uh, than those that are valued on terminal, I guess, stuff. But no, I mean, BTI absolutely decimated. Got down to just multi-decade low levels of EV to EBIT. Like, people hate these companies; they don't want to own them. There's no passive flow into them, and therefore, until there's a catalyst like their own repurchase program or insert whatever activist something here. Well, at least you're going to get paid a lot of money in the interim. Like you're talking about but even with it bouncing back from the low is still north of 9% dividend. And that's not even with a high payout. I mean, yes, it's a high payout. It's 65% target payout, but at least for a tobacco company, that's not that high of a target payout ratio. And from the analysis that I've done and seen, they have capacity to relaunch the repurchase program durably once they come to the report full year in February. I would be surprised if they didn't. To be honest, it would make me question, unless there's some really good explanation. It would really make me question what's going on. They have a lot of liabilities coming due in the near term, and they'll have to keep rolling out debt. Their cost of debt is going to rise, but they're not that heavily levered in the context of their business and the consistency of the cash flows that they're going to get. And then there's been a few things in the last few weeks in the world of nicotine where I think it was New Zealand kind of pulling back from the whole generational ban on smoking or tobacco or whatever it was they were trying to do. I think you'll see the UK with silly Sunak pull back on his whatever it was he was trying to do, following the Kiwis. Well, now the Kiwis aren't doing it, bro. So maybe you can just change it from 18 to 21, like is what I think a few analysts expect they might do now. So, but these bans, like these announcements, oftentimes the reaction in the stock price is not proportionate to the impact on the company's operating businesses. Like the UK, for example. Okay, if you wipe the UK off the map for the company, other than having to relocate to a new country that exists, the company's only losing 1% to 2% of annual free cash flow. It's not impairing the business by any stretch. Yet, like when they announced the news, it was multiples of the impact on the business price decline on a percent basis. So that's an opportunity. Again, I still think if you're looking out 5+ years, BTI is a stunning opportunity to locate some capital in your IRA or some especially tax advantaged account where you can simply get that big dividend and redeploy that cash into other opportunities if you want. But yeah, I mean, I see it hard not to get double digit total returns, and I think you push up past the mid-teens really in most cases for BTI, but annually. But yeah, we'll see.
Yeah, it does definitely make a good chunk of my portfolio, and the dividends are kind of tasty. At what was it, like 8-9% right now? And then, actually speaking about like buybacks, like I thought like the PBRA and then like the PBR price gap would have like closed by now. Also, do you know if the buyback's been happening at all, or like behind the scenes?
I haven't followed them that closely. I'm not sure.
Oh, well.
So there's a feature on Koyfin that lets you easily graph ratios now. So let me see what the graph of PBR to PBRA looks like over the last few months. So it has been declining, the ratio of PBR to PBRA. Yep, but that's the one I own, is the preferred.
All right.
All right. Anyone again else? It's 5:10. We'll probably wrap up soon here. But if anyone else wants to chime in on anything we've discussed or on a different topic, feel free. Oh, one thing we didn't talk about, I guess, just waiting to see if anyone else wants to chime in, is this morning we got the ISM manufacturing PMI, one of my favorite reports to come out every month. there's again, it's like the different facets of the real economy relative to the financial economy. The real manufacturing economy remains in recession. The real freight economy remains in recession. ISM PMI came in at 46.7, which was weaker than expected, unchanged from October. If it's below 50, it's contracting. If it's above, it's expanding. So, and then when you just look at what people are saying from a respondent perspective, it's been a similar story for most of the year. Paul, let me bring you up. But this like resilience and strength in certain financial assets, and certain aspects of the especially consumer portion of the economy is not really in line with other portions of the economy, manufacturing, transport. Quote, economy appears to be slowing dramatically. Customer orders pushing out. All efforts being made to right-size inventory levels, both to mitigate carrying costs on pushed-out orders and to load up an inventory where costs are exploding, like cold-rolled steel. This is a computer and electronic products purchasing manager. Starting to feel softening in the economy, with labor still a challenge to backfill critical roles. 2024 forecast looks challenging, especially from a cost perspective. Chemical products purchasing manager. So like just lots of that. And look, I get it. A handful of anecdotals in one report shouldn't inform your view, but it does not feel like there's some fuel that's going to go in and make the economy resurge. I think it makes sense why the Fed, the view is that the Fed will begin to loosen policy somewhat in 24, because it does definitely feel like, even though there was a strength in consumer on Black Friday and kind of the start of this holiday season, let's see, Paul, let's see how it manages the balance of the year and the start of the next.
Yeah, I was just gonna quickly. Oh, wait, can you hear me?
Yep.
Oh, okay. Sorry, my thing says I'm still a listener for some reason. No, I was just gonna say, like, I don't know if this space is going on, but I guess what were your comments about the whole like Shein IPO or even Cybertruck? Those are Shein is more up my alley, but the Cybertruck is just funny because I just keep seeing basically everybody completely crap on its whole design, features, and price since it got released.
What do you think about the Shein IPO?
No, I made a tweet the other day. I thought it was hilarious because, like, it boomed with TikTok and everybody's doing their Shein hauls, etc. You had the valuation probably explode to, I think it was either at or near 100 billion, and then they had a down round which cut it by a third, and then I think within less than 12 months, then they were trying to get an IPO going, and I think they hired MS and GS to be the book runners on it, but to then get back up to just under 100 billion again. I'm like, what could have happened in 12 months that makes you think an IPO can get you back up to basically the valuation that you had before VCs, granted VCs who have been just like pissing away money this entire time. Like what do you think that value is? It's just funny. They're probably going to get it.
Well, Paul. At least if we look at the indices, how much did multiples expand from earlier this year? Like,
I don't even know where we started at the year. I know we bought it at like 15 or something.
Yeah. I mean, look, it's obviously trying to be opportunistic. It definitely, to me, reads we're at the end of the cycle. People are just trying to shovel whatever they can get into the public market. Whatever deals they can get done, they're just going to try to seize on this last ray of opportunity that has reopened because of this resurgence in everything. That's my skeptical way of looking at it.
Oh yeah, I mean I don't blame them. I mean, take advantage if you can take advantage. I just think it's funny because it's like, who's going to be the sucker to actually pay for that?
Well, they're just going to sell it to the next sucker who's going to pay more. Paul, don't worry about it. Who cares?
Oh yeah, don't get me wrong. I know how the game is played. But no, I'm very curious to know when they actually get the yes, one out. What it's going to look like, because if it's anything like Temu, like the growth exploded, but you have to imagine it's for marketing costs. I'm just very curious to know how things have materialized. Besides the obvious of like the assault on fast fashion and how wasteful it is, Shein's up there.
Yeah, like I said, when you buy clothes from a Shein, you're just hoping to wear it 2-3 times. Post that, and you hope it fits. At the best, it's cheap. Yeah, you get a use out of it, you throw it away.
Oh yeah. I mean, like I make it a thing. I don't buy fast fashion, so I don't do H&M. I don't do Zara. I don't do any of those guys. But I just remember like they just came under assault, and I'm just like all the bags, all the bags that this stuff comes in, and it goes straight to the garbage, even if you return it, But not that they care. But it's just interesting because I think perspective has changed somewhat. I don't think they would have had a down round if it didn't. But the Cybertruck is equally a joke. I keep seeing everybody trying to like they could fit in the trunk of it. This one guy had like half a bicycle. The other guy had like just like one little cooler. It's just so stupid.
Yeah, it's just a truck for geeks. Geeks don't have, a real use for a truck bed, so it's perfect actually.
I think it's like one of the actual. I think it might be the only truck that was not built for the function of being a truck. If that makes sense, right? Yeah, cool, it's bulletproof. Like, where are you going? Like, you need it to be bulletproof. Um,
It's
but
just
as
a
far as like,
talking point. People that own it are gonna tout that and talk about it at Cars and Coffee, and
oh
it's
yeah, but it's also at the same time, it's like okay, like if that's the only talking point, like what was this? Somebody's like talking about like towing capacity and like all that kind of stuff. It's like, yeah, there's a reason why Ford is still the king of trucks. Like, sorry, not sorry.
Yeah, I made a comment earlier. I don't know if you were in the room, Paul, at the time, about the weakness in Tesla stock compared to the balance of the market. Post that today and yesterday tells us that disappointed the price that had rallied viciously this year. It just looks like it's still priced for things that don't exist and that are not going to impact the bottom line anytime soon.
No, not at all. But it's kind of always been that way. I mean,
Yeah.
when hasn't it? Well, maybe in the beginning
Well, I
days.
guess the thing is, like, you are actually now going to have declines. Like, this is not a growth company. EPS is in decline, yet the multiple is actually going to re-expand into the triple digits here at this price if it doesn't commensurately see the decline in the underlying. It's just incredible to think we're at where we are in the cycle. Automotive sales are where they are in the cycle. This company is where it is, and it's trading like it's just. I just can't understand it, man.
Yeah, I think a lot of cultists got figured out when the prices just kept dropping and dropping. And, obviously you're going to deal with an angry customer who's like, I just bought the damn thing like 3 months ago. And now the price is 20% cheaper. And everyone at the beginning of the year was arguing for increased volumes will make up for it and, blah, 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 blah. And it's like, you could have seen the writing on the wall on that one. And never materialized. And actually, I think, I believe it was Chanos that said that so far like 2024 estimates have come below 2022 actuals or something like that. I forget if that's what he said.
Exactly.
I was like, how are you then why are you bidding this up? It doesn't make any sense.
The latest Morgan Stanley report has them trading at 100 times 2025 forecasted earnings, which in between in 2024 they're going to be trading at almost 140 times because their EPS is going down. It's just, yeah, it's really ridiculous. It to
Yeah, the
me,
whole thing is.
it's just like the data clearly show that so many in the retail investor segment have massive overweight positions to this, and if things go how I think they go, there's going to be a lot of tears. Like the people who think they caught the bottom by buying at 100, to me that's like in a very bullish scenario, Tesla could trade at 100.
Yeah, but
I
people
think
have
it
been saying that
trades
for a
mid.
while.
I think it trades
Yeah,
mid double
pricing is always
digits.
in the.
Yeah.
Yeah, well, I mean, don't get me wrong. Like the brand is still there. It's just
Okay, the brand's not
slowly.
worth hundreds of billions of dollars. No
Well, yeah, I
automotive
mean, I
brand
don't think so.
is.
Yeah,
The
I don't think so
brand.
either. But it's every bullish argument that people have made for it, right? Like so you had like the full self-driving, you had the margins, you had the volume, you had the market share, you had the infrastructure, you had partnerships with other
Dude, what is
companies. So that
going
you
on
can.
with your speaker? It is like grating in the background.
Oh, sorry, I'm walking outside and it's
Oh,
I
okay.
have my hood on. Sorry, is it like any better or no?
It's a little better now.
Okay, it was like scraping across my hood. Sorry.
Okay.
Um, but it just seems like every bullish point is being devalued, which basic finance says then you should discount the price. It's just not worth it. Every video that comes out with the full self driving, with people who are trying to argue for it, it just makes them look stupid because it just doesn't work.
Yeah. Yeah. I mean, the math just doesn't add up unless you ascribe massive valuations to non-existent businesses, which the market has done and will continue to do for an unknown period of time. Capitalism. Yeah,
Yeah,
I
you
put
think
on my
capitalism is
screen
more
the
euphoria.
next 12-month estimate for Tesla EPS, and the estimate is at 359 for from here next 12-month EPS. I mean, I based on the fact that Morgan Stanley has them in the high twos for full year 24. Um,
Yeah, well, it's now in the high twos for 24, but what was it at the beginning of the year? I thought it was like 4.5, like
oh,
5.
I'm sure. Yeah, let me look at the trends. Uh, EPS for full year 24. Well, at the beginning of this year was almost $7. It was
Yeah, but how
678.
much of a joke is that? That's such a joke.
Yeah. Look, I just, like I said earlier, I want to see a big unwind of some of these pod shops that just decimate a lot of these trend following stocks that have just gotten grossly, grossly bloated valuations. And it would be very healthy, I think, for the market to digest that. I'm sure you saw that story about the pods out in Bloomberg yesterday, uh, talking about how massive they've become and impactful they are as marginal buyers and sellers in a lot of these securities.
Yeah, but hasn't that always been the trend though? They're becoming more and more
No, well,
meaningful.
I mean, the trend has been them getting bigger, yeah, but I hadn't realized, and a lot of the people who I saw commenting on the article who manage money professionally seem to have been surprised by just the sheer size they've gotten to these pod shops. So I don't know. I guess that the point the article made that I think is valid is what happens when everyone is rushing for the exits, but everyone's in the same positions, and you all are highly levered. You're gonna have a lot of stuff blowing up. I mean, obviously not all of them will fail, but that will be the great time that if you're someone trying to buy things on fundamentals and stupid shit happens from the monkeys that are trading back and forth with one another every day, um, then you're probably going to get yourself some great buying opportunities. But it'll be hell and fear and all the headlines will be talking about a crash. But I mean that's the time to be buying. by the forced sellers who are being liquidated because of their leverage.
Well, that's why I don't think the real pain has actually happened. I mean, don't get me wrong,
Oh
there
no,
has
no,
been
not at all.
pain. I don't think the real pain has happened. I was talking to, I was in another spaces earlier today, and they're like, yeah, we really haven't seen anything bearish on the charts. And I'm like, okay, which, I mean, fair. If you don't see anything, you don't see anything. But at the same time, I'm like, so your argument about, sorry, your position, how do you feel about the spreads between 10 and 3 months, right? Which has a 100% hit ratio. You're basically betting against that. Yeah, and they basically said like, yeah, it could happen. I just don't see it right now. Which is like, yeah, I mean, it's the first time for everything. But I think everyone wants to be a contrarian, because they want to be the oddball out. Like, oh yeah, I called it. But I think there's so much polarization between what being a contrarian is right now. That I think there's too many people who are too net long on things and either haven't entertained the possibility of a downside or have, but are just too stubborn to take any type of insurance.
Speaking of insurance, I picked up about 30 basis points worth of Nasdaq, the Qs, 350 strike puts for, I think it was the June quarterly expiry. So I saw those today, and would have been a little bit cheaper if I picked them a little earlier in the week during that run up in the morning the other day. But I feel good adding some insurance for sure. You've got the VIX term structure. Front months look stupidly cheap. You're going to pay more, of course, as you go out, and that's obviously talking S&P, not Qs. But I mean, with a VIX under 13, there's not much concern heading into the end of the year here. And I keep thinking that like this it's just not normal, and obviously it was historic for in the month of November, the major equity indices to rally like they did. The 10-year doesn't compress from almost 5 to 420, that often, and it's not going to compress from 420 to 340 or 350. In my view, it's more likely to re-expand. I'm actually surprised how low the 10-year's gotten, but I could be asked wrong on that.
Yeah, I just think there's just a lot we don't know. Like, you don't know what you don't know, which is everybody basically at this point. But to be a fool and not at least want to entertain the opposite happening, whether you're a bull or a bear, I just don't understand it. I look at the people I'm speaking to, like we're all kind of on the same page. It's more so the Twitter crowd, being like, "I told you so. Look, I'm right." Blah 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 blah. Like, okay.
Look, nobody knows what's going to happen. We can prognosticate and share our opinion, but that is the wonderful thing about the future, is that it is unknown. And as we've seen for the last few years, truly anything can happen. And I would definitely agree with the sense that the amount of concern about the downside expressed in what people are willing to pay for protection is just not there. The concern is simply not there. And you know what? So it's nice to be able to buy that sort of protection if you want, when it seems as though you're not paying it much for it. I mean, that who knows what realized volatility will be between now and the end of the year, first quarter. Perhaps, right? Selling vol works until it doesn't. So this kind of continuation of can VIX go into the single digits and just keep going down without there being any sort of an event? It absolutely could happen. Who knows?
I mean, the same thing happened in 08 with Bear and Lehman. It's only that those two causes individually had their own spikes in the VIX, and then eventually, I always mess this up. It was Bear first, right? No, wait, I think so. I think it's Bear first, then even. I always get them confused. But then the second bank to fail, then that just set everything going back, and everybody realized that the global economy was quite screwed. But I don't know, because if you're talking about a liquidity event here, it's like what's it gonna be? It'll be a lot of things.
Yeah. All right. 5:30 here. We've been going since 4. We talked about a few different topics. I think we can probably wrap things up here in the next few minutes. Paul, appreciate you tuning in on your afternoon walk and chiming in. I think Sick dropped, but everyone else who's tuned in, appreciate it. You guys want to kind of go through maybe final broad market thoughts into next year, and then we can wrap it? Or if there's any particular thing you wanted to shout out or call out?
I think for people who are listening, if you've had a good run on certain things, and even you yourself are questioning why it's that high, maybe spend an extra second or two with me and decide if maybe you should take some off the table.
Joe?
Nothing to add. I was actually just checking out the article you sent in our team chat about the new McDonald's burgers. Maybe we'll talk about that next week.
It was a good article for those who didn't catch it in the Wall Street Journal, just going deep into some revamps in their burger assembly and manufacturing process, if you will.
It made me want a McDouble is what it did. I will say when I
The
traveled
other,
quite a
did you
bit.
see the other one this week? The Cosmics, the kind of McDonald's, I guess. I've never been to one, but it's that place out on the West Coast that sells the sugary coffee beverages. Bros is the stock, yeah. But they're going to have this kind of beverage oriented potential. I mean, this is a concept that was near their HQ that pictures came out this week on, but this more drink centric um, concept called Cosmics, anyways. It'll
No,
compete
I
with
haven't heard
Dutch
about that.
Bros and others like that, I
Yeah,
guess.
I've seen Dutch Bros out here. I don't think I've even tried it. I've never given it a shot. Um, but yeah, when I was traveling, I remember
Well,
being
if you
in
want to overpay for sugar, then at least you'll get good service, I've heard.
when I was in Japan, the McDonald's was so good. It's just like on another level. Same with some places in Europe, like in Switzerland. Obviously, in Switzerland, oh my God, was it so expensive? It's like $16 for like a Big Mac sandwich, and then you know an extra 50 cents for a packet of ketchup, and they will not give you a free cup for water. That is not a thing. So definitely wide range of McDonald's prices. But when I was in Japan, it was so good. Like it looked like the commercials, tasted like it should. Um, Very few teenagers working at the restaurants. It was typically full-grown adults making your food with a lot of pride versus America, where it's not the greatest employee base. But yeah, some thoughts on McDonald's. Maybe we'll talk about it a bit more. Maybe we'll financial model it. I don't know.
Well, the thing with McDonald's is that you're really kind of similar to the Coca-Cola company. These are really more royalty businesses with the franchises than they are operators of the businesses, right? We talked about that with Coke, how like with the bottlers, right? They've been right sizing, divesting. They want the lower return on invested capital business to not be something they have to have, and let someone else manage it in alignment with them. Similar to McDonald's with its franchisees, right? And there's been several reports that I saw in the last few weeks of quick service restaurant chain, big chunks of franchise-owned shops filing bankruptcy. There was a Wendy's and a Burger King, talking about the franchisees being required to shovel a lot of money into capex and not really see a return on it. And I guess being debt burdened, they're filing. So yeah, I mean it's always interesting. Just always got to remember, just because you look at McDonald's as stock doesn't mean you're necessarily buying a the burger restaurant operator. You're buying the royalty receiver of all of those leases, from the franchisees, the payments for the franchisees. So, anywho, yeah, let's let's go over the McDonald's story maybe next week. I have this wonderful looking Big Mac sitting in the middle of the screen for folks that are looking at it, and as the originators of process optimization in a kitchen setting, it'll be great to see if they can bounce back on their burger quality with these operational enhancements that they're looking to lay out. Yeah, we'll talk more about it then next week. But thanks, folks, for tuning in to our Wook and Review this week. We'll have a few more of these as we round out 23. We do these on Fridays at the close. And yeah, we also on Wednesday nights host an open mic from 7 p.m. Eastern on the @GMEDD handle. So if you'd like to tune in and talk markets, discuss investments, et cetera, we would always love to hear your perspective. So thanks, everybody. Hope you all have a nice weekend. Stay safe out there.
Cheers, everyone. Thank you, Rod.